What if I told you one man controls more money than most countries' entire economies? One man who can move markets with a single statement, who survived every financial crisis of the last 2 decades, and who Wall Street literally cannot imagine disappearing. That man is Jamie Dimon. And his empire, JPMorgan Chase, isn't just big. It's a $4.6 trillion colossus, holding 20% of all money in the US banking system. JP Morgan is more valuable than its 3 biggest rivals combined. Last year, they did something no bank in American history has ever done: cracked $50 billion in profit. There are many ways to measure a bank's success: profit, market value, asset size. But there's one metric that matters most: staying power. And no figure in modern finance has won power and kept it like Jamie Dimon. Jamie Dimon's a great banker. I think he's been the head of JP Morgan for 17 years, something like that. This country is a lot better off because Jamie Dimon has been running JP Morgan. But here's the twist. The success of Jamie Dimon and JP Morgan casts a long shadow. When you think about it, it's more of a question mark than an exclamation point. What is going to happen to this gigantic bank after its longtime CEO leaves? No one really knows. For 20 years, Dimon has led JP Morgan's ascent of Wall Street. It's a financial dominance that manifests itself in the most visible way possible, its new headquarters rising like a monument on Park Avenue. JP Morgan is about to get essentially its own little mini neighborhood, a kind of Jamie Dimonville, if you will. This was a labor of love to have a physical embodiment which represents our company. JP Morgan has something like 17,000 employees in New York City, making it one of the city's largest private employers. So they have their new building, which will hold about 10,000 of them. But then you look across the street to 383 Madison. That's the old Bear Stearns headquarters. And then they bought 250 Park. And despite his noted opinions on work from home, don't give me the work from home Friday works. People join JP Morgan because they want to work for Jamie Dimon, this legendary CEO, Dean of Wall Street. He just wants his people and his organization to be the best, and so he brings his A-game and he expects the people around him to do the same. All of this adds to the Dimon aura, unfaltering Wall Street confidence mixed with, at times, unpredictable candor. The debt ceiling is potentially catastrophic. That hurricane is right out there down the road coming our way. I probably shouldn't say this, but when you see one cockroach, there's probably more. He just says what he thinks. Absolutely not, and that would be the road to hell for America. To his critics, he's a corporate monarch. To Wall Street, he's a stabilizing godfather. Over the years, as Jamie Dimon has evolved into this more statesman-like role atop the finance industry, he wades further and further into policy and things that aren't directly touching banking. But here's what most people miss. Jamie Dimon had a long-running joke that he would be there 5 more years no matter when asked. I love what I do. But let's face it, he is 69 years old. He's had a couple health issues over the years, including throat cancer more than a decade ago, and more recently, a heart issue in 2020. And JP Morgan actually had to appoint temporary co-CEOs while he recovered. Though he keeps coming back for more, eventually he will retire. But when and who will fill his shoes is anyone's guess. There have been some iterations of potential successors that have ended up all leaving to go take another big job, or leaving to retire. The 3 current likeliest contenders to take over for Jamie Dimon when he eventually retires are Troy Rohrbaugh and Doug Petno, who run the Commercial and Investment Bank, and Marianne Lake, who runs the Consumer and Community Bank. But they're the latest in a series of likely contenders, and there are always more coming up the chain at JP Morgan. At the same time, for JP Morgan investors, there really is this Jamie Dimon premium where they're most interested in more Jamie. Historically, this sort of cult of personality in business is often called the key man risk. Where would Amazon be without Bezos, or Tesla without Musk? So too is Dimon to JP Morgan. And yet, while it's certainly true that Jamie Dimon's tenure atop JP Morgan overall has been very successful by a lot of measures, it hasn't been all rainbows and butterflies. For example, in 2012, there was a $6 billion trading loss called the London Whale. Jamie was called to testify in front of Congress a couple times. In some cases, he actually thrived in the congressional hearings. He had some lawmakers asking him for advice on the economy. I would like to come away from the hearing today with some ideas on what you think we need to do, what we maybe need to take apart that we've already done. Another episode involved the acquisition of Frank, a financial planning platform for students that led to its founder being convicted of defrauding the bank. But when all is said and done, they paid $175 million for it, which amounted to 3 hours of revenue that year. So that's a great example of how these missteps become more embarrassments than anything else. JP Morgan has been able to survive these missteps, whether big or small, because of its fortress balance sheet. Fortress Dimon is always about the balance sheet. Fortress balance sheet is a term that Jamie Dimon has been using throughout his entire career. It's constant stress tests. It's looking across a range from best possible outcome to worst possible outcome, and making sure that JP Morgan can weather that storm. When you think about risk, think about things that can go terribly wrong. Can you survive them? Still, when it comes to the government's annual stress tests and other regulations JP Morgan is subject to, Dimon is a critic. There are a lot of rules that Jamie Dimon does not like. It's just more regulations and more rules and more requirements. One of his governing principles on the topic of regulation is that it should not be so complicated. He has his famous spaghetti chart, which is a graph of all the overlapping regulators that JP Morgan deals with, and he often will carry around a paper version of that, especially when he is in DC. But despite all the regulations, government hasn't kept the bank from growing. Here's where it gets interesting. We can look at the financial crisis when much of the building blocks of the modern JP Morgan were built. JP Morgan rescued Bear Stearns, which gave them a far larger trading business. They scooped up Washington Mutual after it failed. So the JP Morgan that came out of the great financial crisis was a much different, much larger JP Morgan than the one going in. Are you too big to fail? I don't know what that word means anymore. Even when accused of being too big to fail, JP Morgan somehow came out bigger than ever. One irony of the global financial crisis is that the thing that we associate it with ended up resulting in a landscape where the biggest banks got even bigger. At the time, Jamie Dimon had only been CEO of JP Morgan for a couple of years, but he did warn about the excesses in subprime mortgage lending in an annual letter to shareholders. Looking back at that letter now, he was clearly right. A year ago, we were worried about banks that were too big to fail, but in the last year, big banks have gotten bigger. It's sort of the tragic failure about the regime we came in with. For all the unrest, the regime would remain largely unchanged. Years later, JP Morgan would benefit from a crisis yet again in a government-led deal. The US is pushing First Republic to be rescued with banks after the stock slump. First Republic was a regional bank based in California that really focused on serving wealthy clients until it failed in 2023. The United States government literally had rules on the book to stop JP Morgan from getting an even bigger portion of deposits in this country. And then when First Republic got in trouble, that same government allowed JP Morgan to buy it. First Republic will now be taken over by JP Morgan. Between that and Silicon Valley Bank's failure, paved the way for JP Morgan to dial up their desire to be the go-to bank for the venture capitalists and startup ecosystem. The bank also constantly assesses the competitive landscape. What is Block doing? What is Citadel Securities doing? What is Apple doing? And really try to make sure that someone like Apple doesn't come in and eat their lunch. Because JP Morgan is pretty much everywhere, Dimon's successor will inherit not only the firm's vast empire, but a pivotal role in the stability of the US and global economy. You think about the fortress balance sheet concept and practically what that's meant for JP Morgan and Jamie Dimon over time. And it's JP Morgan constantly emerging bigger and stronger from crises that have taken other firms down. The rules of Wall Street, informally speaking, are to make as much money as you can legally, and to lose money as infrequently as possible. JP Morgan has been very good at that playbook. And that, more than any chart or spreadsheet, is what defines modern American capitalism. One day Jamie Dimon will step down. When he does, we'll find out if JP Morgan's fortress was built for eternity, or if it was always just one man's empire.